Eddie from thefinancialbulls.com, and I'm here with the biweekly market recap and some setups for next week. And it's not actually a biweekly recap anymore. I haven't made a video in the past month, so I apologize for that. I've just had a lot of schoolwork with AP classes and everything, but whatever. Let's get to the markets. So here's a chart of the S&P. So as you can see right here, we've just been chopping around the past 3 months pretty much. As you can see, just stuck in this range between 212 and 203 on the SPYs. And I think eventually we can crack this form of resistance. And we sort of did on Friday, but not really. It wasn't that strong of a move. So I think we're still just hanging around this overhead supply at 212. But in the meantime, I wouldn't be overly long this market just because of this supply, and I'd be actually tailing more towards a short. But I wouldn't be surprised if the market does break higher above 212.50. And then I don't think it'll be straight up. I think it'll be more choppy action like this, which pretty much means that it's going to be hard to trade the market, but that the market isn't being very directional right now means that shorts and longs can work if they're good longs and shorts. So to get to a few plays, I'm looking at El Paso Electric Company. This looks pretty cool. I like playing this sort of false breakout strategy, and I'm incorporating the RSI into it, reading about JC Peretz, where pretty much you're playing traders who got stopped out here when the stock broke below the prior support level, 35.42, and then now that since it's above that level now, I think it would pay to be long, and you have a lot of upside, potentially to the highs at 41.89, and your downside is minimal at 34. You know what to get out when it breaks the prior low at 34. So that looks good. AHGP, another stock that looks good from the long side. As you can see here, it broke the lows at 48.15 a couple days ago. Couldn't stay below that. All people who got short got stopped out, had to buy back their shares. People who bought long here are buying back their shares now, and the stock rallied, and now it's above that former resistance. Now it's turned support again. And the cool thing is, look at this. See where this mouse is? This is the RSI low on 17, and here it is around 20. So lower lows in price, higher lows in momentum. That's what we call a divergence, and I like to play divergences now. So I think this could be a good play from the long side. And a similar chart that had this pattern was actually Tesla a few weeks ago, and I laid it out here, where it's the same type of pattern where the stock broke the previous lows of the past 3 months, but momentum made a bullish divergence, and then look what Tesla has done the past month. It's been on a tear, gone from 187 all the way to 248. So that was a faked out a lot of traders who went short the breakdown, and then the stock rallied after the smart money got in. And also the flat 200-day moving average helped, which usually causes a lot of whipsaws and price action. So that was good. Stocks I'm looking for, the short side, DAL. As you can see, this is the reverse of what we want to see from the long side, where the stock, here I'll go to the weekly chart, this is the 15-minute, stock broke above this resistance line at 47.38 at these highs, kind of hanging out around those highs, couldn't hold above it, broke below. You stay short below 47.50 and just see where it goes. DFS is another one. As you can see, false breakout. So everyone, look how bullish that looks, that breakout on Thursday. Finally above all this choppy range trading in the past few months. But it couldn't hold that, and it was down 1.5% on Friday, coupled with a bearish divergence in the RSI, where you have lower lows and momentum, and usually when you see price making higher highs, you want to see higher highs and momentum as well. You want momentum confirming that, and that's not happening in DFS. So I'd be careful with this stock. IPAR, same sort of pattern actually, where you just have a false breakout. Traders got caught in it, and there's more downside here. TE, here's a stock from the long side. This is the last stock that I'm going to show. I like this from the long side too. Even though it's below the 200-day moving average, I feel like we have a nice bullish RSI divergence when you had a lower RSI here than you do here, and then price couldn't stay below this prior low at 1858. So I think that as long as you stay above the March lows, you should be long. And if you go back below those March lows, which is around 1840, then all bets are off and you take a small loss. But the potential upside is huge, as you can see with a chart like Tesla, where this thing just rallied. So pretty much if you took the play right here, you would be risking 190, the low's at 181. So you'd be risking about $10, 190, yep, about $10 to make, as you can see, $60. So really good risk reward on these false breakout trades, and very high probability too, because you're not the one shorting the breakdown like everybody else. You're being a little bit contrarian. You're buying stocks that are weak. You're shorting stocks that are really strong. So you get right near the top tick for most of these. But overall, the overall market, very choppy, but we're pushing on that overhead resistance, so I wouldn't be surprised to see a break, but I just don't think there's going to be any drastic trending moves after this, though. I don't think it'll be a strong breakout, and I wouldn't be surprised just to see another retracement back down to 2070 after we just touch this overhead resistance at 2125. In other words, I know they say this a lot, but the market really isn't giving you a clear indication of what it wants to do. So that's why I have a core set of longs and shorts, so you can attempt to be market neutral, which will hopefully increase your odds of winning. So thank you very much, and I'll see you in 2 weeks. Happy trading.